I've got to talk about inflation with you. You guys are seeing it just like everyone. You guys are seeing it from the lending side, of course. How's inflation impacting the real estate market, and particularly the investment real estate market in your eyes right now, just based on the experience of what you and your firm are seeing?
This is one thing that a lot of people shouldn't like change, right? So yeah, the biggest things that change with inflation has made a whole impact in the capital markets is rising rates. Rising rates that reflect what the inflation, not only inflation has caused, but also with the rising interest rate that the Federal Reserve has done as well. And the following scheduled increases thereafter multiply all that. So it's not only just the rates, it's actually also the credit risk, the overlays that we actually do, making sure that what type of exposure we want and want to avoid, because we also try to plan ahead, right? Because we know that it's coming, the tidal wave, right? So you don't want to shoot for the middle when the wave is still moving, right? You still want to jump higher and hopefully you can actually jump over that wave in that sense, if you will. So essentially that's what we're expecting. And so rates have gone up, sure, but also with that, there's also good benefits to it too, right? There's a lot of benefits, to be quite honest. But all in all, the inflation is a healthy sign in a sense. It's correcting itself. No matter how you want to look at it, it is correcting. You just have to learn how to navigate it. But if you can't navigate it, or you're stubborn in your ways and you don't want to diversify yourself properly, it can be a impact on your financing.
No, absolutely. So I think more than anything, people just need to be aware of how inflation works. We've done a number of videos here on the channel about it, how you can utilize inflation in your favor, how you can avoid negative, inflationary events, obviously, as well. And just be in tune with that. Like you said, you guys are staying ahead of the curve, getting over the wave. You guys are forecasting ahead, and based on kind of all of these elements that come into your space and real estate lending in particular, you guys are making moves now that are going to help you down the road to capitalize on that, which we always talk about here on the channel, guys. Good times, bad times, anything in between. There are always ways to capitalize on the situation. There's always ways to make money. If you've got your eyes open, you know what to look for, and you're ready to take action. You said there's some pros. If you don't mind sharing a couple pros with our viewers, so that they know what to start looking for, and that they can ultimately take advantage of that as well.
Yeah, so if you're an investor, everybody's just watching this is pretty much a investor of some sort, whether it be you're a beginner, you're a greenhorn, whether it be you're a pro. But again, it's simply fact that investors have a good niche, and it all specifically comes down to where the location is at. So what I tell you here might not help you specifically in where you live, but it could help almost 90% of most other places that you currently other investors are investing in, right? Sure. So one thing about inflation, right? Inflation's right. Rates are going up. So guess what? A lot of buyers that have been purchasing properties in the past have been owner-occupied homeowners, right? People are looking to buy properties on their own. Guess what? When rates go up, they're buying homes as an emotional property. They're buying emotionally. You as an investor, you're buying on a fundamental fact of cash flow. Is it going to make me money? Does it make me money? I don't care how much. As long as it's making me money, it makes sense. Okay, I move forward. No investor's going to say, oh, geez, it's not worth my time. It's, everybody's time is money, right? But if the numbers make sense, obviously you'll do it, right? As an investor. So what happens is you're going to get a lot less people actually putting in offers on specific properties around all 50 states, right? They're going to avoid buying it. They're going to have less and less offers. Listing agent is going to have less and less offers. That's where investors come in and says, hey, I see, I have a better shot of actually putting in an offer at X amount of dollars and win that listing or on that property, right? Versus a property that that somebody wanted to actually buy for themselves, you know, for whatever that reason. So that is a big key for it. And the other pro with inflation, it says, yeah, but my interest rates are high. Great. And, you know, I had to put more money down. All right. You might just not buy as many throughout the whole year, but you have to, your other part of it on your investing. If you're going to be, let's say if you're a rental investor, right? You're going to just increase your lease, right? To justify the means, right? And it makes sense, right? You know, if inflations go up, you're not going to say, oh, well, you know, the same property that I would normally charge $1,500 a month, I'm not going to say, you know, because of inflation, I'm going to charge $1,400 a month. No, with inflation in this area, in this pocket of area, let's say, for instance, Los Angeles, for instance, it's going to go up, right? So because the cost of living's gone up, cost of your loan's gone up, cost of your rental's going to go up, right? And it just happens that throughout. And again, it's not every specific location. There's going to be pockets of areas that you may not get around that you can't get around, but in general terms, that's the actual norm.
Yeah, obviously, you know, that's casting a pretty broad net, but there's always going to be pockets in the United States that don't react to the housing market the same way others do. So it's a case-by-case basis, of course. You said a couple things there that kind of caught my attention. The first and foremost was during the pros there was the competition starting to dwindle out a little bit more, which is obviously music to every investor's ears. You know, people that have been out there trying to, you know, putting in 50 offers to get houses. Hopefully those days are starting to be numbered at this point, but less competition, less offers should bring some of the pricing down there, of course, and then not getting emotional about it. Look, as an investor, these are widgets to me. I'm never going to live in the house. At the end of the day, it is a math problem, right? I'm putting it in to whatever formula you have, and it's going to spit out. And based on that, I'm going to make a decision. I don't care if the room is white or yellow. I don't care about anything other than the fact that I can make money off of that. So that, you know, not having that emotional attachment and treating it as kind of a means to an end, I think is the approach that people have to have. I think that the market is going to start to loosen up some because of those rates. There's going to be less buyers that are out there in the market, of course. And as investors, we've talked about short-term rentals here on the channel before. That's a strategy right now where you can actually go in and buy houses almost at retail, almost at full retail, but you're still getting the ROI and the yield on that investment because you're getting significantly more monthly revenue than you would on a long-term lease or a long-term buy and hold. So we'll drop some links to that as well below, but love the pros on that. Obviously, there's going to be cons that come along with inflation. What are some cons in your opinion as it relates to the real estate market and private lending in general?
So yeah, so one, there's two major things that probably stick out of my head right now is one, because of the inflation, markets get tighter and tighter. Okay, so there's a lot of uncertainty when they don't know what. Ultimately, right now, we don't know what the inflation is, how far this inflation is going to go. Right, we're dealing with a major player right now with the war, and prior to that, I mean, we had inflation issues because of we can't get semiconductors in place.
Supply chain problems.
Yeah,
that led into it.
So there's many things that are actually uncertain right now. A lot of people want to be optimistic and say, yeah, you know, this will be all over in a few months, and they said that quite a few times, and I says, no, that's not going to happen, right? I know that there's a lot of uncertainty. So what's going to happen is there's going to be a lot of restrictions into the capital markets because there's a lot of uncertainties. There's going to be investors out there that are going to sit on the sidelines, or they want to sit in the sidelines, or take even a pause for a moment, and find out what's going to happen, because there are going to be opportunistic investors out there that'll say, hey, you know what? I'm not going to be all that aggressive right now. I'm going to sit back, relax, and see how this plays out. What they're trying to see is how far that the markets, if at all, will crash. And if specific in these industries crash and sell, just like the real estate market, what do I want to save all my cash and actually just buy up everything at that moment in time? Kind of like stocks, right? You're basically hedging on that stock to actually get reduced to basically nothing. You're shorting that loan. I mean, you're shorting that stock, if you will. So you're going to have opportunistic investors like that, and depending on that and specific investor, and I'm not talking about real estate investor, depending on the capital markets, they may very well tighten up the belt with everything else, tightening the belt to other investors, such as real estate investors. Okay, the flow of money, if you will. Okay, so that's really my biggest concern when it comes to that, because any of that stuff can actually happen.
Sure.
My opportunistic, I should say it, sorry. My opportunistic side to things is that, it's not, this wasn't like pre-2008, era.
Sure.
Right? Not everybody was buying homes with 100% financing, 103% financing, and, couldn't afford anything specifically. And, whether it be liar loans, they don't have
self-reported income,
self-employed, all that jazz, right? Most people nowadays are actually putting down a good, healthy chunk of down payment, right? So it's, most people, even if the market corrects itself because of inflation, well, that property that you actually purchased at $300,000 may have been now worth $450 or $500. But guess what? Even with market correction, that $500,000 home now comes down to, let's say, even $300. You bought it at $300. You put down 20% on that $300. So you have a loan at $260. You're still in the green, or you're still in the black, if you will. Right. So it's a lot of investors out there, a lot of homeowners are not going to be underwater, and they're not going to have that type of correction. But again, I don't want to shoot myself in the foot, right? We don't know what's going to happen, but I don't see that happening. I see a small correction only.
Yeah, and that's kind of the way that I'm looking at it as well. And, we've done videos over the years here. Everyone was anticipating when the market was going to correct. It's long overdue at this point in many cases, or many economists' mind. That was propped up by the pandemic, and there's certainly arguments to be made for that. I don't think it's ever going to go back to the way that it was, pre-08. There's too many checks and balances in place there today to prevent those things from happening. Small corrections, though, we definitely see those forthcoming. So just based on what you're saying there, should people be a raging bull, or should they be scared to death?
Raging bull. Totally. Raging. Absolutely. So here's my weird answer to it, is that as an investor, you shouldn't be actually, sitting on the sidelines in times like this. You should be going full head of steam to actually purchase it, because again, it's right now in every single state that you can think of, right? There's always a pocket demand in certain key areas. Other people that are moving from one state to another, and corporations are moving from one state to another, what have you. A lot more people are immigrating to the United States, what have you. There's going to be a demand for property. Property is not going anywhere, right? Until you can actually build properties on top of, mountains and all that other jazz, you should be focusing on buying and purchasing every single property that you can, that can actually make a dollar for you, right?
Sure.
That's the goal. You shouldn't be scared to to that fact, because you're not going to lose your shirt. You're investing and you're making, because everybody else right now that is not going to be buying a home as a owner occupied property, right? Guess what do they have to do? They're going to rent, right? Those people that they were planning on buying a home is going to be your tenant, right? So that's what your goal is. As an investor, you want to buy and fix and rent out as many properties that you can, right? Generate that cash flow, because again, it's gonna, how should I say it? There's a demand for it regardless of that. And the unemployment numbers are absolutely low right now. You know, I mean, again, check on your area or where you invest in, but the unemployment and everywhere else is doing very, very well. So they're all cash flowing, they're making money. It wasn't when you're, you know, right in the midst of pandemic mode where people are unemployed. And, you know, I think that most people nowadays are making money now. Okay, they're reinvesting, and you got to focus on those key areas of where you invest in, because what I say to you that might translate in LA might not be translating in New York or Alabama, for instance, whatever you might be investing in. So you got to really do your homework as an investor. If those numbers of those, or I should say, your criteria, if those fit your mold of who you're looking for, or as far as your investment market, you should be targeting that and hitting it hard.
Yeah, I agree with that. And I definitely subscribe to that, not sitting on the sidelines. I mean, the way that you make money in investing is being out there, active and ahead of the curve. There's always ways to make money, like I said, in good markets and in bad markets, and sitting on the sidelines and that wait and see approach. And everyone's going to have different levels of risk aversion. So, you know, I'm not pointing fingers or trying to put anyone down that is, you know, that's got different levels of risk aversion, of course, than I do, or other investors that they might talk to. Everyone's going to have their own threshold there. As you said, we're always going to encourage everyone to go out there and do their own research. What we can do is bring information here on the channel, make you aware of it, put it under the spotlight, and then you guys can kind of take it from there and see what the right fit is. Like he said, it's just kind of a math problem at the end of the day, but that sitting on the sidelines approach, you know, it might be a couple years before, you know, kind of the dust settles on this thing, and then you've lost 2 years out of your investment life, and you can't get that time back. You cannot make more land. So to your point, unless you build up, you know, there's only a finite amount of land that's out there right now. So buying it up, even if your margins aren't phenomenal right now, or if the price corrects, like you said, you've only got the equity from your down payment, the prices are going to continue to go back up. There's always going to be a demand for housing. That's just simply never going to go away. And you've got a hard asset that you can sell at any time. And you know what? You don't lose money unless you sell. So if you can hang on to it when market's correct, you can come out on top smelling like roses, or come out the other side smelling like roses. So final question here. If I'm watching this and I'm an absolute rookie or a greenhorn, as you called it, what can I do right now? How do I get started? What would be your advice to someone that's on the sidelines and they're ready to play, right? And they're seeing what's going on in the market. They know they might need a resource like private lending, of course. What advice could you give someone like that?
Sure. So let me target who specifically. So there's going to be different levels of investors, and I get investors that call me and say, hey, listen, you know, I'm doing this, this, and this with my, you know, with certain people, with other homeowners, and I'm actually like renting out their homes. Basically, what's the word I'm looking for? Arbitrage. So I get quite a bit of them that call me for that, and unfortunately, that's not what we do, right? We can't lend on arbitrage properties. It's not yours. We can't lend on it. But it's great that people are getting into that, right? They're just start off, and a lot of people don't have the capital resources in place to start off with, and you know, and that's a great place to get create their cash flow. I don't know much about it, right? To an extent, but that's not my game, right? And that's okay. If you're honing into that platform and you're creating a cash flow, all I could say is save up your money. Okay, you need to save some money to start your small project, and it doesn't have to be a $300,000, $400,000 home. You can start off with small homes. $100,000, $50,000, $75,000, whatever it might be, whatever you can afford, and if it cash flows. There's a lot of properties around the states that actually are in distressed areas, but then rents are staggeringly high. You can target those areas. That you can buy a home at $100,000 and have a cash flow $1,500 a month. You know what I mean? Especially the 2, 3, 4 unit properties, right? Guess what? Those are great properties because you got multiple units. Even though they're not single families in it, but you're not buying it for yourself. You're not buying it to live in, but you have multi-units that actually all of them cash flow. So I would say start off small, find out what you can. Okay, it's great that you're doing, all your other deals, whether it be arbitrage or anything like that. But you want to save up where you can have something for yourself on title, because you can arbitrage 50 homes, right, and make a good cash flow. And hopefully that type of work is great for you and it's bringing you cash flow, but you're also doing yourself a disservice if you just stick to that and you just stay there, because you're only benefiting the actual owner of that property, right? Yeah, you're getting the cash flow for it, but he still owns that property, and any increase to that property value of that home, or if he decides to want to refinance it out, great question. Hey, you helped him increase his rents, right? His rental or his rent roll, if you will. So now he can go and refinance his property at great rates, because now you, instead of that $2,000 cash flow that he once had, now it's up to $3,000 cash flow. Now his debt service ratio is actually much lower, for whatever it might be. He might, for whatever it might be, whatever floats his boat. But specifically, you're only benefiting the actual owner of that property, not yourself, to an extent of, realized or appreciated value.
Yeah, no, we've done some videos about arbitrage. We'll drop some links to that below, about no money, no credit, so no cash, no credit deals, way to get into real estate without having a big war chest of cash or access to a lot of capital. But what I'm hearing overall is, whether you're a rookie or not, just get in the game. Right? Get in the game and start somewhere. Just get active, whether it's going to local RIAs to start, whether it's getting into some arbitrage scenarios, or whether they've got kind of the right stuff to immediately go in and start working with private lending institutions like you, that they can kind of cut their teeth finding some of those maybe smaller deals and then build on that. But I think, to your point, regardless of what you're doing, you need to start socking some money away, so that when the deals come along that are going to require putting some capital down, that you've got access to those. So I appreciate you sharing, David. I know how valuable your time is. We love having you here on the channel. We would love to have you back here in a couple months just to get another update. Maybe bring some folks here from the channel that are actively working with you guys on projects right now, so we can talk about those if you're willing to come back on.
Absolutely.
All right, guys, so we're going to go ahead and wrap up the video today. As always, go ahead and go out there and do your research. We can bring a ton of content here on the channel, but we're always going to encourage you to go out there and do some digging on your own behalf. If you like info like this, you want us to continue to bring guests like David and his expertise here on the channel, go ahead and smash that thumbs up button below. That's going to help out our ever-changing YouTube algorithm. If you're not a subscriber already, go ahead and subscribe, and make sure you ding that bell notification. That's going to give you an alert as we bring new additional videos here on the channel. We drop a few new ones every week, so we look forward to seeing you on the next one. And until then, make it a great day and take care.